Guys, what is the crack? I'm here today with Jack Starling, who is a Bitcoiner, very knowledgeable Bitcoiner. Jack, you're very welcome. What's the crack?
Hey Dinny, how are you doing? First crypto podcast.
You're welcome, man. I'm looking forward to picking your brains and finding out what's going on. Um, Tell us a little bit about how you got into Bitcoin, Jack. And just for the record, what age are you, man?
23. So fairly new to it, but I've been in the space since the best part of 6 years now.
Yeah.
Um, so made a lot of mistakes along the way. I kind of got humbled a few times, but yeah. So 23, but been in it a while. But yeah, I suppose I got intro to the space through a family member that was looking to go Ethereum mining. So totally, you could say went down the not the rabbit hole there, but like went really into the mining side of things for a couple of years, and then by my exposure to the mining, I started learning about crypto, what it's all about, and then start to drift more towards Bitcoin in the latter years. But yeah, that's how I got exposure for Bitcoin or from Ethereum mining. And since then, like I've probably done thousands of hours, just reading books and all those kind of cool things. But yeah, that's how I got intro to the space.
You fell down the rabbit hole and then suddenly you're like up all night watching fucking podcasts and listening to stuff like all end up.
Yeah, I think it kind of happens with everyone. You kind of get the 3 a.m. like you wake up and it's like can't go back to sleep, so you put on like Pomp or someone, he just talks you back to sleep. Then like,
Yeah. So before we get into Bitcoin a little bit more, because I know that's your primary focus, but what about the rest of crypto? Does anything interest you there?
yeah. So to be honest, I kind of see the rest of crypto as, so again, started off with Ethereum, and when I came in, then it was mostly Ethereum and then Bitcoin I looked at, and then that kind of seemed to, as it kind of happens in the space, I think that to most people it kind of seems boring, and that's the old tech is a lot of the narratives you hear flying around. Um, Over time, I just started to realize like there definitely is interesting stuff happening in crypto, and especially with the recent crash, it just really made me question and makes me question whether I have any business messing around with any of this other stuff at all. Like it's like the way I kind of see it is you have a whole world of like angel investing and seed investing in like these startups. Like there's tens of thousands of apps launched on the App Store and the Play Store every year. Only a few work. It's going to be the same with crypto. Like when I got in back in 2017, I invested in like 10, 12 different coins. They all bar two went to zero, and then two of them are, one's kind of doing okay. Not that I'm involved in anymore, and there's another that's kind of hanging on. But at the time, with all the money that was behind these coins, like promoting the marketing, kind of believed that they were going to take over the world. And then, as I said, got humbled. They nearly all went to zero. But now I just think that Bitcoin's going to change the world. It's going to, like, it's so early. The fact that we can have these massive crashes right now just shows how early it is. Like it's less than, as we'd often say, it's less than a trillion euros market cap, or $1 trillion. There's hundreds of trillions of dollars worth of currency out there. Bitcoin's a better currency than all of it. So over time, that's going to become recognized, and Bitcoin's going to grow because of it. It's not a sure thing. There's no sure things in life, but like I believe that I should only be focusing on Bitcoin because the risk reward of looking at these other coins like that could go 1,000x, just isn't worth it when you have Bitcoin here that could probably go anywhere from 10 to 100x. Like why am I wasting my time on it? And as well, it's not my area. Like I'm not an angel investor picking small startups out in Silicon Valley or somewhere like that. I don't know anything about that stuff. So why would I pretend I do and go on Reddit and these Twitter communities and just, get involved in these things that are so new, so nascent that like like you can even see it now from 2017. The cycle is starting to repeat again of a lot of these coins and projects and platforms. They are going to go, or they'll just dwindle a slow death and bleed to zero as the money for the projects run out. It just, it's not for me, I suppose. And I kind of think that a lot of people in the space that come in new, they think they're too late for Bitcoin. So they go into all these other projects. And if they don't learn fast enough, they're going to get in serious trouble. Like, I think that's long and short, but really, like.
Yeah, I suppose a lot of us make that mistake. You know, we come in, and what I try and communicate to people is like Bitcoin is the perfect thing to build an alternative pension on. Like it's literally the perfect vehicle for a pension. So have exposure to it. But other people are, without knowing it, they're buying these other things thinking it's their pension or they're going to retire early by buying some other crypto project. But when you look back 4 years, you'll see that today's list, many of those things don't exist, they don't feature. So what happened to all the people 4 years ago who invested into those projects? Well, they fizzled out, like you mentioned. You invested into 12 and 10 of them are gone. And then if you go back another 4 years, it's a completely different list again. So if I'm an investor and I'm going to hold something for a period of time, it's a no-brainer that like Bitcoin is the only thing I should be really interested in, unless I come into this area and I want to be a professional sort of trader, I want to be a professional venture investor. But if I'm just a car mechanic, or I work in a bank, or I'm a fitness trainer, I'm not going to be able to trade these things. I'm not going to understand them. I'm not going to be able to manage the risk on them. But by building a pension around Bitcoin, it's fairly straightforward. All I have to do is keep it secure. And literally that's it. I can go back to working on cars or doing my fitness classes or working in the bank. Like I don't have to be a professional investor. And that's my take on why, Crypto With Dinny's plan is basically based around Bitcoin accumulation.
Yeah, definitely. And like I think that, like, yeah, if you want to have a bit of fun, and sure, it's everyone's own money's like their own responsibility, but like even up until recently, like I did have a certain amount, like tiny amount of votes, like maybe 1-2% of the total amount. And they're kind of just evaporated again. And it's like, oh God, I made this mistake again. So it's kind of like, I was like, this is not for me. Just focus on Bitcoin. Like I understand Bitcoin really well. Well, I don't think anyone, it's kind of a never ending journey. Like, but I get this stuff around Bitcoin, don't understand the other stuff, risk reward. I'm just not going to bother with it. But I think that everyone kind of has to go, at least most people go on the journey with crypto as opposed to Bitcoin. Like I think everyone kind of does, they do their time in that sense that they explore a lot of the olds and start to learn about Bitcoin itself kind of by association, or through pain, like through like losing their money and stuff. And then they come back to square one and they realize how early it is for the whole Bitcoin industry. Like, so now, not to say though, education, like if you can catch good like what you're doing, you don't have to make those mistakes, but there isn't enough people doing good education at the moment, which is yeah, it's not a lost cause, like I think, but yeah, so that's that.
Yeah, no, a lot of, not a lot, but a good few of the consulting clients that I have are clients from 2017, clients from 2018, who've gone through the pain cycle. And my sort of mission is, if you're coming in, you don't have to go through the pain cycle. Try and learn from other people's mistakes, and again, that'd be just Tony Robbins sort of thinking. You can make the mistakes and you can waste all your own money, or pay someone who's done all that stuff, and they'll save your time, and time is our most precious thing.
Exactly.
Talking about Bitcoin then, can you explain Bitcoin in the simplest terms you can to me?
So yeah, I think the problem with Bitcoin is when people ask us questions, and this is why so many people get confused, is because Bitcoin is kind of something different to so many people, so many different people. It means something different to them. But like, I suppose, well, I think there's, maybe it's not super simple terms, but if I break down to three areas that I think, so most relevant in the West, so Bitcoin is savings technology. It's actually relevant everywhere, but most relevant to us, the Western world, it's just savings technology. Cash, so your euros, your dollars, your pounds are designed by design to depreciate over time. So they're going to become worth less. Like that's what inflation is. And Bitcoin is designed to appreciate over time. So it becomes more valuable, mainly because the store value aspect, it's fixed in supply, can't be any more of it created. And then like, if you like, you often hear bandied around in economics, like the rational action would be for once people learn about Bitcoin and they learn about euros, they make that switch and then they say, right, I'm going to save in Bitcoin now. And that's what a lot of people, including myself, do. They switch to the so-called Bitcoin standard. So like, yeah, so Bitcoin, super, the best savings technology the world's ever seen, modeled off digital gold, and so small, like as an investment. And this is why a lot of the big money players coming in, like they don't care about Bitcoin philosophy, and they're in it to make money. And it just so happened, like it's perfect incentives aligned. They're investing in Bitcoin because of the fundamental reason there. But that's just one area. If you take the second area, there's like the payments and banking aspect of it. Like you can be your own bank. There's been nothing like that really ever. So it's like you can be your own bank. It doesn't really sound like a big deal to us at the moment because like we have our, all our Stripe and PayPal, all those kind of things. But it's going to become more relevant over time as Bitcoin appreciates in value and becomes less volatile, more like money. The payments and banking side of it in the West is going to become a much bigger deal because you'll be able to transact Bitcoin natively at much less cost and credit cards and stuff. But if you think of like the global picture, like something like 80% of the world are unbanked, and like straight away, that's why you have countries like El Salvador, like, the Central African Republic, like they're making it legal tender. There's a lot of other countries looking at it as well at the moment. It's because they have no banking infrastructure whatsoever. And then combined with like, they could use Bitcoin and then they could combine that with stable coins as well to give themselves an economy where they can, transact value like we do without all these lockouts from being locked out of the financial system. And then I suppose the third aspect of it is, and this is kind of talked about the least, I think, but it's becoming more relevant. It's like the whole censorship resistance aspect. And to be honest, this could even be like it's really slept on. This could be the biggest, well, it could be absolutely huge because Bitcoin can't be seized. Like you have to consent to give it to someone else. So like this has various implications in like a lot of different things. Like it means that on a fundamental level, maybe governments won't be able to coerce people into collecting taxes anymore. Whether you like it or loathe it, like it's just, this mightn't be the case because as it works at the moment, like everything is tracked through the banking system. Like if you're not paying your taxes, they'll know, they can show up, you could go to prison, whatever. But like with Bitcoin, well, it can be tracked on an individual basis, especially as we move closer to a Bitcoin standard where fiat rails kind of disappear and people start transacting natively. It starts to mean that it gets very, very hard and inefficient for governments to, well, they can print money full stop, but like it gets very hard for them to even collect taxes. So it kind of has to all be consensual. And then there's other things like with the censorship resistance, you obviously can't print more money, which they all kind of tie in together, but you can't print more money. So this means like countries going to war with each other can't finance their wars as easy. And like even typically like when a country like, so if the world's operating on a Bitcoin standard and everyone's saving their wealth in Bitcoin, you have to be like, you have to approve to give someone your Bitcoin. You have to consent to it. But like, if they destroy the whole country, they pillage the place, they've basically destroyed all the value there. So there's no reason to conquest this place anymore. So it's like an incentive for peace, but there's kind of a million and one different ways you can go with the censorship resistance angle. That's kind of complex and it gets into kind of hairy-fairy thinking like maybe this, maybe that. But yeah, like the book, The Sovereign Individual that was written in the 90s, largely predicted a lot of what happened with the internet and predicted Bitcoin well before Bitcoin ever came about. And has a lot of interesting thoughts around this, and like I'd recommend anyone to read. It's quite a heavy read, but like if you like kind of that kind of stuff, it's very, very thought provoking on where this could go.
Consequential accounting maybe is sort of what I think of it, because it's a fixed money supply and there's no bailouts. You have to consider what you're going to spend it on, with a lot more thought. And then in terms of the fighting aspect, like I do think, I know we say Bitcoin fixes this, but it maybe doesn't fix everything, but it does make war much more difficult. At the moment, there's no consequences to go to war, and both sides can destroy themselves. And that's purely because we have a money printer. But in the natural world, I always look in the natural world. All my life I've done that. And it's how I figured out that the whole food pyramid and government advice on what to eat was an absolute disaster and destroyed people's health since the 70s. And if you look at photographs of us in the 70s, we didn't look like photographs of us on the beach now. And it was just simply because we came off our natural diet, okay? So pivoting that to money, because our money isn't natural anymore, okay? Because money is just energy, and the laws of the universe is that energy can't be created or destroyed, it just moves form. But we've created this ability to, I suppose, create this energy. Really, we're not, we're just redistributing it. So when animals in the wild are fighting, they don't fight to the death. In fact, most of the time they don't even engage. And in years and years ago, when armies went to war, there was consequence of going to war. So generally, they didn't actually engage, or there might have been a small battle, and then it was decided, okay, you've got us. There's no need for us to have everyone killed and have all this destruction and death. It's just you're the more dominant side, we'll back down, because both parties have a consequences. If both armies engage and they get wiped out, now they're more vulnerable to attack from other people. Similar to animals, if animals engage and they attack and they both harm each other, well, now they're both vulnerable to attack from someone else. So most of the time they'll just sort of strut, and it'll be sorted out that way. But with the money printer, there's no consequence, because we can destroy the value, and then a government can just finance another war by printing more money. Like, so it's not like it harms them in any way. So that's just arguing with reality, I think. It's just not the way the world should work, and Bitcoin will uncover that, and
Yeah,
it'll, as I cause say, have more consequential accounting. Like at the moment, governments can just be a really badly run company, effectively a government's company, and there's no need for it to be run well like a private company. If a private company is not run well, you go out of business. So
yeah,
you have to be running well to stay in business. Because governments have the monopoly on money, they don't have to be ran well, and we see that they are really wasteful on money, and that hurts all the individuals. Me, you, everyone who pays tax. We pay loads of tax, and it gets squandered. And you see that just at a local level. There's always the joke of the council workers. There's 10 of them around the hole and nothing being done. Whereas a private company, there's two lads there. They're there for half the time, and the job is done right. So for me,
definitely.
Bitcoin just sort of creates um, an incentive for us all to clean up our act, and us all to, not just me as an individual to value, do I need to consume and buy this thing now and spend my Bitcoin, but it's going to be worth more in the future, so maybe I don't need it. But it also is going to keep our governments more to account, so that perhaps they have to be ran more efficiently, because there's not an ability to bail yourself out. I know that's not explaining Bitcoin in simple terms, but
But
it's
just on
very
that, Dinny.
difficult to.
Oh, definitely, yeah. And but just on that, like it's like say like just exactly what you said there. If you think of a family at home, like say their own books for living, like day-to-day living, like you can't just go in and spend like what you like in supermarket or whatever, and or not super bad example. You can't go in and buy like the best car in the car dealership if you can't afford it. Because when you come home, then you might be able to pay your food on the table kind of thing, or you could lose your house. Like with the government, like it does not work like that. There's no, it's like the opportunity cost is removed, and this is totally inconsequential. So they can't balance the books, which they don't every year, and they just can't do it now. Um, it's like there's no such thing as a free lunch. It's being paid for in other ways that we can't even begin to understand. Like, sure, we can see like with inflation now, like from the lockdowns, yeah, there's been a lot of money created, and there's other things going on now to speed it up, like with the situation in Russia with oil, all those kind of things, supply shortages. but like you can't even begin, like you can't begin to know. There's second order follow on effects, third order effects, four, like you just can't know what kind of problems are coming out of this thing. Now you can see with inflation straight away because that's an immediate order effect. There's a lot of problems come from inflation that like could be well, that is tied to other things. It's just very like in statistics you can't just nail it down because it doesn't work like that. Um, but like it really it's almost like, and I heard this recently that I've kind of been not quite sure how to explain it, but I'll have a go at it. But it's kind of like if you think of like a cookbook or something, you've all the metrics for recipes, and you have like you have the fixed unit of accounts. So whatever it is, whether it's liters or miles, whatever, you have your unit of account. You know what it is. When they create more money, that changes the unit of account for money, which is something that everyone needs in society. So it's like this has untold effects that we don't know about really. It's like when America decides they're going to create trillions more, they're going to create trillions more credit to back the banks, and they're going to give out fiscal stimulus checks to give everyone free money. It's like because the world is ran on the US dollar is the world's reserve currency, and everyone has to kick back to that. It's like that's like robbing from farmers in India. Or anywhere in Africa. It's doing it for own Americans, but it's doing it for everywhere. And those people in India have no idea what's going on in America. Like, this stuff is just fundamental to how our societies are meant to function. And to be honest, like there's very little. Bitcoin is giving incentive for people to learn about this, and now we can fix it through Bitcoin. Before that, like there was a gold standard, as we know, but like that got took off for various reasons. Yeah, it's just a massive rabbit hole of like this could be the biggest thing, and it probably is the biggest thing, assuming it all comes off okay. Definitely since the internet, but like it could be like usher in a new era of humanity, like you know.
It's a fixed measuring stick. Let me grab this here because this is what I was thinking about it. Okay, I was thinking about that very thing you're talking about.
Yeah,
This is a fiat meter. Okay, it changes all the time. I'm just holding an elastic band here. But like if you gave this to a fella to build a house and you said, right, that's a meter, build a house. But one lad's stronger and he holds it a bit this way, and one lad's weaker and he's not holding it. You have no hope in hell. But we measure our wealth in fiat currency, and fiat currencies change all the time. Like how crazy is that? We measure our weight in like kilos or or pounds an ounce or stone and pounds, but they're fixed. They never change. But like the irony is, we measure our wealth in something that changes all the time. Like you can't measure your wealth in pounds or euros because 20 years ago, someone who would have been rich at 20 years ago, you're a millionaire. It's like, Jesus, you never have to work again. In today's terms, you're a millionaire. It's like, okay, you're upper middle class, but you're going to burn through that. If you want to buy a house, that's going to be pretty much most of your money gone. So you're certainly not very wealthy.
yeah,
And that's because the unit keeps changing. So it's like an elastic band, but it's funny because we, generally we measure people's wealth, and I think there's more to wealth than money, obviously. But most people measure how good people are by how much they're worth in dollar or euro terms. But I know that's not taken into account, emotional health, spiritual health, physical health. But we're using a measuring stick that's constantly changing. It's like an elastic band. So it's like, how do you quantify it?
yeah, yeah.
Really difficult.
Yeah, and it impacts every part of society. But like if you just go back to the inflation thing, like the savings aspect, like saving in the credit union was very popular in Ireland for a long time. Like my parents would have said, put money away in the credit union, you save that your little bit each week. But like to be honest, that's kind of bad advice now because like if inflation, like the government says it's what 6-7% a year, like really is much higher than that. You're just leaking like your purchasing power, your wealth stored in your money every year by just having it in there, and it's slowly going to disappear over time. And like, not only do you have that, you have it happening with the money itself, but then you have the wealth divide being created, which is causing all the cascading effects after it. Like if you look at price of the house in Dublin, whatever, like 20, 30 years ago, it was like, well, around the time euros came in, I don't know what it was exactly, but like say 150 grand or something, maybe. Sure, it's probably, it's like 600 grand now, or it's definitely not far off it. And this is, while it is driven to a certain extent from people not being able to build and stuff like that, the primary driver, which is never really spoke about, is like what Rich said at your conference, like it's rearranging the deck chairs of the Titanic. Um, yeah, I know that was good, but it's never really spoken about. How have prices like quadrupled or gone up 5 times since then? Like that question hasn't been asked at all. And you might say, like some people might go, oh well, let's maybe just think of it in Dublin terms, but this has literally happened in like every Western economy all around the world. And it's the same thing going. So you have the Eurozone, you have the ECB going with the money printed there. No one's balancing their books. You have America, you have like, the Federal Reserve, same in England. And it's just creating a storm of a huge divide. And it's like the cascading effects from that then is you have young people now can't afford to get on the property ladder, rent their whole lives. They can't start families, all kinds of things. And it's almost never spoken about as to what the primary driver of this actually is. And Bitcoin is shining a light on this. Like the gold bugs, people that love gold, invest in gold, did it for years. No one ever really listened to them. Now with Bitcoin, it's actually giving a solution to it, and it's incentivizing people to come in and learn just what it's all about.
Yeah, the second and third order consequences is something that no one considers. When we had our pandemic, like I was very quickly looking at them and I was like holy shit, like there's more to this than just locking the place down. Look at second order, look at third order. And of course with propaganda, people are just, I don't know, the wool is pulled over their eyes. But like something as simple as what you've mentioned there, if young people are priced out of homes and they can't buy a home till later in life, if they can ever buy one, it's deferring them certain families. If you don't start a family when you're young, it's much harder to. Therefore, we don't have as much people. Therefore, pensions are a pyramid scheme or a Ponzi scheme. So it relies on having enough people to pay the pension of the people who are alive now when they get older. So if we have a decrease in families, we've don't have an ability to pay pensions in 20 years, and things like that just aren't considered. So let me just recap on Bitcoin in simple terms. It's a savings technology. payments and banking, awesome. And we're considering the network as well as the asset because there's two things to consider, and censorship resistant money. And my next question then is just the cost of living crisis, because we're in one. Like you're a young guy and you can see the price of assets of trying to get on the property ladder or whatever. In simple terms, what's caused the cost of living crisis, especially in the last 2 years, like where we've seen the price of assets like a home explode in value, in cost, in price?
Yeah, well, I suppose it's kind of was similar enough to the previous, like what we spoke about there, but like again, it's you see, it's easy if you, well, I think anyway, it's easy to get lost if you talk in the short term in this stuff. So obviously there's supply crises with like Russia and all kinds of, there's a whole thing with just all that stuff, the guys getting stuck in the canal out in Egypt or that kind of thing. That does drive price, and it comes up and comes down because of that. But the underlying, like the reason it's been going, so if you think of like you'd often see like a picture on Twitter or something of like the price of a McDonald's burger in like 1970. It was like 10 cents in US dollar terms, like, whereas now it's like you go in, it's like $5 or something. Like, why is that happening? And it's happening because the fixed base of money isn't fixed. It's becoming much bigger, and you can't just create wealth out of thin air. It's like, I often think about if you were on a desert island, like, and you wanted to create a prosperous nation or whatever, the first thing, like, to create a prosperous country, you wouldn't go and say, right, we're going to all get rich. We're going to build a money printer and just print money and give it to each other. It's like from actually creating goods and services. So I suppose, but to your point then, like with the lockdowns and all that kind of stuff, and the country's really been in the hole with regards to like just shutting down all their economies, this kind of thing. And then this was going on way before 2008. It's been going on, you know, for ever really. But the creating of more money to finance the government, finance the economy, finance bailouts, the banks, all those kind of things is the root is driving prices up over time slowly. And it's much more weighted towards assets, like with houses and stuff like oil, like commodities, those kind of things. And then it's helped along by secondary factors, and that they might come down a bit, but overall the trend's only going in the one way. So yeah, especially in the past 2 years, like this has been exacerbated, and it seems to be going on like a kind of like a J curve, or it seems to be going at a faster rate. Like every time I drive past a petrol station now, fuel's gone up again. Like, where is this going to end? Again, largely at the moment in the short term, driven by like secondary factors, so the Russian stuff, whatever. But you can bet your life, like in 5 years, it's not going to be below what fuel cost was in say 2010. It's just not going to happen. And why is that? It's because of the underlying driver of the base of money constantly expanding, at least in my opinion, anyway.
Sure. What about the latest Bitcoin crash? Would that concern you? I know you're here 6 years, so you're probably well hardened at this stage, but how do you feel about it? Or have you any ideas what caused it? Or is it just part of the journey of this new technology becoming adopted?
Yeah, so to be honest, like, no, it doesn't. Like, what I say to people, like in this, with this going on, take the time to like listen to people like yourself, talk to people like yourself, or just read the Bitcoin books. Most people aren't willing to do that because it's a lot of time. Like if you just read the Bitcoin Standard, the Price of Tomorrow, a few other books, build your own conviction. Like I'd never tell people to put money in per se. It's good to put a little bit of money in to try and help you understand it, and then incentivize you to learn. But like in terms of the fundamentals and the crash, absolutely nothing's changed really. Like Bitcoin has seen huge drawdowns in the past. Like it's had bigger crashes in percentage terms in say like what 2014, 2017, 2018 crash. It could go down a lot more. Who knows? Anyone that's telling you they know where it's going to go is lying to you, because no one knows. But the fundamentals are there. The like companies, there's been more people working in Bitcoin, working on Bitcoin, learning about Bitcoin. Wallet numbers are going up the whole time than ever before. I think with this market crash, it's just natural. This just has to happen, especially in a totally unregulated space. The big blow-ups have to happen because it's the market ultimately regulating all the mad stuff going on. Like it's the same with the dot-com boom in the early 2000s. You had these crazy companies, billion-dollar valuations like Pets.com that didn't have any revenue or business or anything. And then you also had Amazon, who obviously like biggest company in the world now. So it comes out at the other side, but there's going to be a lot of pain along the way. It's just trying to ignore the noise, focus on the signal. And look, it makes perfect sense that the crash had to happen when you have like these huge billion-dollar cryptocurrency projects and platforms that have no value really whatsoever. They don't actually do anything. Like not to be, I look like something like Cardano, for example, has been going. I wouldn't even get into because I don't follow them enough to know, but in depth. But like it doesn't really do anything. Nothing really happens on these things, and it's worth like, you know, more than most companies are in the world, other than like, you know, Netflix or Facebook or the top 6 or 7 companies. Like it's mad stuff. And then you have, not only do you have like the crazy valuations and stuff, but you also have the other side of it, like just like crazy business models and stuff. Like you seen exchanges just doing mad stuff like paying 15, 16, 17% yield. Um, how is that being paid? Anything that high should be kind of given Ponzi scheme alarm bells. It's not being paid through legitimate operations like lending to the business, and then they pay back and they're providing economic value to the society. It's being paid from things like just lending to a DeFi protocol that's paying out. So if the exchange is paying 17% or platform and the DeFi protocol might yield 30%, the exchange puts it in there and then they keep the difference between the 17 and 30%. And like the DeFi platform is just all kind, like a lot of them are just outright Ponzi schemes. Like they just make more money on more and more people keep having to come in, or just goes to zero. And you're kind of seeing that happen. That a lot of them are going to zero now. So yeah, and then you had blowups like you had Luna and all that kind of stuff, and yeah, all that stuff just had to go. And it's actually healthy for Bitcoin because it's much better. It happens now, in my opinion, anyway, rather than later when much more people would be impacted, as if they kept growing the way they would be, you know.
I get you. Yeah. Do you think Bitcoin has any legitimate things that threaten its future? Like, is there any causes for concern that you see, or what way do you see Bitcoin? Do you see it as a certain success or a near certain success, or?
Well, like there's no certainties in life, as I'm sure we agree, but like Bitcoin's had a heavy going already. I think the biggest threat to it is probably, I'm not sure, is it even a threat? It's more of like a blockage that's going to be hard to get through, but should prevail. It's like the idea of the state coming down hard on it, because like state and the establishment, they're not going to let, like, their incentive structure will be destroyed if Bitcoin take, or not their incentive, but their control structure will be destroyed if they let Bitcoin take over. And I think they don't really realize that it can do this yet. And there's a very poor understanding. Especially you'd often hear them talk about like up and coming cryptos per se, and like new technology and stuff, but it's the new technology. Like Bitcoin is the technology. It's that's gonna, that, and it's the only one that has the ability to like totally change the dynamics of money in society, because it can't be controlled. It's decentralized. There's a lot of other projects that are decentralized, or say to be decentralized. They're not really, because it's just whoever holds most of it controls what happens with it. But like, yeah, if what the two big ones are the regulation coming down hard. I don't think that can really be stop it, but it could make it difficult, because like you have the whole game theory aspect of Bitcoin, where you have like, if Latin America and all these countries out there, or even African, anywhere, it doesn't have to be third world or second world or whatever. It could be like somewhere like Switzerland comes out and sport Bitcoin. Which has actually already happened in one part of the country, but if they are doing that and their currencies, their society is getting more prosperous because they're embracing this technology, and other countries aren't, people are going to want they're going to want the currency of the harder money. So it's like you have a bucket. So if you have the euro that's leaking water at the bottom, and you have another in one bucket, and in another bucket you have Bitcoin that has no leak, everyone's going to want the Bitcoin, and it's going to keep becoming more valuable as a result and appreciate over time. But yeah, that's on the game theory side of things. And as well, it's just going to be tremendously difficult to enforce any of these laws. Like if you take China, for example, they've banned Bitcoin umpteen times, and the latest ban, they kicked all the miners out the country. And still, it's something like 5 or 6% of the global hash rate of the miners is coming from China. And like, you can imagine it. So that means the miners are actually in China. So they're managing to hide the actual physical miners there, still mine. And you can imagine how hard that would be in such an authoritarian society as China. They can't effectively get rid of it in a place like that. So that's just the miners, but never mind people that are actually still using it and transacting it. The numbers would be much higher because it'd be much harder to obfuscate what you're doing with Bitcoin to use it than it would be to, like, hide this huge mining operation in a warehouse somewhere. But that's on the regulation piece. And then the other piece is kind of tied in, but maybe like changes to Bitcoin's protocol that, like, it's very hard to change Bitcoin. Like Coinbase and a lot of the corporates and miners tried to change it back in 2017. They came in, they wanted to make the block size bigger to allow it to scale, but the big trade-off would be that much less people would be able to run nodes to verify to verify their transactions and what the blockchains are authentic. They didn't see this as a problem, so they tried to come in, change the network, and ultimately they couldn't because they didn't get a high enough buy-in. It was something like they had to have over 70% buy-in from all the nodes, which just ordinary people that run Bitcoin clients. They couldn't get that. Then, if they did get that, it would probably mean anyone, like, they're much more powerful now, so they probably could change Bitcoin. So they don't bother now, but I suppose the point I'm making is it's kind of tied in with the regulation one, but it's also that if there was some critical flaw introduced into Bitcoin's algorithm that maybe created a load more Bitcoins or something because of some new update or, inverted commas, upgrade of the protocol, it could be like the fault of our own that Bitcoin doesn't proliferate. So it's important that, like, people are aware that Bitcoin probably shouldn't be changed in most circumstances, and things should be looked to be built on top of it, on the various layers or companies around it, infrastructure around it, but not the core protocol to be changed. So yeah, two areas: regulation. I think that's going to be overcome because of the game theory and how hard it is to actually enforce any laws. And yeah, number two, some kind of critical bug in Bitcoin's introduced into Bitcoin's infrastructure, or even discovered. Probably there isn't a critical bug there because, like, if someone could uncover some bug to give themselves all the Bitcoins or something, it would be, at least for briefly, they'd be very rich. And there's huge incentive for them to discover that because it's open source and anyone can do it. And, like, Bitcoin is the most secure compute network in the world because it's open source and anyone can try and hack it. And, like, there's been hundreds of thousands of attempts to do it and no one's really been able to do it. So it's much more secure than anything like Google or Amazon or Facebook could ever put out, no matter all the test certifications. Everyone, all the hackers in the world would be incentivized to try break Bitcoin to claim the rewards from it if they could,
Yeah. On the regulation side, I'd be like thinking, even if, like, I think that card's off the table now because it looks like over in the US they're sort of getting behind Bitcoin, and it's almost like if you get behind it to some degree, you've no choice. Then you can't undo what you've done. At the moment, even with their futures ETF, like, some of their pensions are all allocated to that now, and they'll be holding it. So typically, they'd be destroying their pensions by doing a pivot on their regulation. So it doesn't look like that's going to happen. I'm with game theory. And then just go worst case scenario, Bitcoin is banned. Okay, well, drugs are banned in pretty much every civilized country. Drugs are bad for you and people can get them. Do you think people can get something that's good for them and it's going to protect their family's wealth? Like, if they can get something that's bad for them, that's physical, that exists in the physical world, well, it's pretty obvious that if there's something that will protect my family, if someone has decided it's not legal for me, just like, well, I'll choose my family over a regulation if it's something that's going to protect them. So I think it's
know?
fairly obvious that, ban or no ban, once people realize that Bitcoin is an ability to protect your wealth, people will choose to own it. And then,
Well,
sorry, Jack.
yeah, no, go on, finish it. Sorry, you cut out for a second. I thought you were.
No, more or less that's my point.
I was just gonna say, like, even say like Nigeria. So in China, they've tried to ban it. Like in Nigeria, now look, Nigeria is not a global powerhouse nation. America is obviously, but like they try to stop people using Bitcoin because they're trying to bring out like their own CBDC and they're trying to pivot people towards that. And it's had the opposite effect. Like Nigeria is like the #1 country in Africa now for Bitcoin use. And like there's actually a lot of Bitcoin developers and stuff coming out of like Nigeria, and it's just it's probably only like 1 to 2% population, but like that is big numbers, you know, that's like tens of millions of people that are like Nigeria is a couple 100 million people there. So and then as well, to your point as well, like they're getting behind it. Like you have these companies like Coinbase who like they have massive clout. You know, huge public companies in America. There's like, you know, 10, 20 public companies now that are directly, like whether they're Bitcoin miners or Coinbase, directly a part of, say, Bitcoin and crypto. And then you have a lot of other companies who are heavily exposed or involved in it. So like, yeah, you've Coinbase, you have Square, you have like all the miners. Then you have like companies like MicroStrategy who hold billions of dollars of Bitcoin. Yeah, I think you're right that the horse is kind of bolted, but even still, if it goes to the worst case scenario, like you said, I don't really think it could be. It would be practical to, and it might actually. Is it like Streisand effect where they try and stop something? It actually has the opposite effect, and then makes everyone want it more. Like, you know, I think that's what it's called.
It markets it. Yeah,
Yeah, yeah. Free marketing. They're like, oh, what's this thing? Like something
yeah,
that's something that's banned. Yeah, something that's banned. People try to learn about. You know, typically, like it's just a weird thing we have.
yeah, and also just one thing we didn't mention then is the political clout that Bitcoin has. Like, as more people own it, you know, like right now in Ireland, there's no politicians really understanding Bitcoin. If you're a politician and you want to do well, all you have to do is say you're pro Bitcoin, because we are like a hive mentality, and if anyone is pro Bitcoin, we rally around them. And you're going to see that. You've seen it in America. You know that any of the politicians who are pro Bitcoin, they are getting shares, they're getting retweets, they're getting likes, they're getting this huge following, this huge traction. And of course, just game theory, you know, in politics is just a game of who's the most popular.
Yep.
You know, so they haven't figured it out here yet, but they will figure it out, just like in the US they figured it out, and they will be using that to promote themselves. That, you know, and then as more people own it, and then there's more incentive because politicians will be lobbying, and they'll have people lobbying for laws to be pro Bitcoin. And just like, to me, Bitcoin is just something that works on incentives, and we all have the same incentive. We want to do right for our family and right for ourselves. And Bitcoin just leverages that. Its success leverages that fact that's built into every human. And it just uses its incentive structures, I think, to infiltrate our civilization.
Yeah, yeah, and it's aligned with that as well. Like it's aligned with it because Bitcoin, everyone plays by the same rules. So it's like the same way that you think that someone, like a lot of people think now that they go to work, they do their thing, save their money, they're putting stuff aside for their college education or whatever in the credit union for their child's college education. Unfortunately, that's probably going to be worth nothing by the time the child gets there, because of like the fact that our monetary system isn't fair. So when the bank fails, they create a new load of new money, bail out the bank, and then everyone has to bear the brunt of inflation because of this newly created money. So no such thing as a free lunch again. But Bitcoin, it doesn't matter how much Bitcoin you hold, you cannot change how it works. It like this, and this is the key thing to understand with like why proof of work for like Bitcoin mining is so important for its decentralization. Like proof of stake with Ethereum and a lot of the altcoins, whoever holds the most coins decides how the network functions. So it's actually no different to our current system, really, that you've to send whoever has the most power, like military might or whatever, decides how things work. Bitcoin, whoever holds the most Bitcoin, doesn't decide anything. They just have to have Bitcoin, and if anything, they're incentivized to protect it. And if they try and attack it somehow, well, they're going to lose all their money. Like, so And the reason this is important then is because Bitcoin sets that base monetary standard that can't be corrupted. It's a single level for everyone. And if you're like a farmer out in Africa, or if you're a guy rocking a suit on Wall Street or whatever, you're playing by the same set of rules, which we've never seen anything like this ever in history. So, it's a big deal. Like,
It's exciting. Tell us a little bit about what you're doing, because I know you're building in the space. I'm not sure how much detail you can go into, but talk to us a little bit about Verify 21.
yeah, so I'm launching a company that's going to be in September, last week, September, hopefully this year, that is going to provide a straight up way for people to access, first starting off Bitcoin collateralized loans, but we'll be doing other products after that. So it'll allow you a way to borrow off your Bitcoin stack. We'll be focused on Europe initially. Later on, we'll be global, but just Europe initially. And you'll be able to borrow off your Bitcoin, and you won't have to sell it. So you'll be able to get euros without selling your Bitcoin, and it's all done in a straight up manner. So I think the problem with like a lot of the other companies already operating in the space is they're heavily built around people don't actually realize how they make most of their money in the back. It's a lot of things like rehypothecation, a lot of folks are in altcoins that might fail, might not fail. And then there's things like tokenomics, where a lot of these companies' business models are incentivized around pumping their token and not actually collecting cash flow and revenue to become a profitable company in the traditional sense. And the big deal with this stuff is like people that deposit money to these platforms typically think that their loans are covered. So they're over collateralized in nature. So for example, if you have 100,000 euros worth of Bitcoin, or 10,000 euros worth of Bitcoin, whatever the amount is, you'll be able to get a loan, 30% loan to value. So you might, if it's 10,000, you'll be able to get a loan at 3,000 euros. And then as long as you can pay the interest on that loan, you don't actually really have to pay it back. Over, like, as long as you can pay the interest and it stays below a loan to value threshold, you're good, then you're fine. But the problem is that while the loans themselves are covered, these platforms are actually doing a lot of other things with your money. So like what rehypothecating means in super simple terms, it just means that they're doing other things with that money that you have on their platform. So if you take like the blow up with Celsius recently, for example, they have the withdrawals closed at the moment because they don't have everyone's money to give out. So if everyone keeps withdrawing the money, some people aren't going to get their money. So it's like a run on the bank. And it's because they're doing all kinds of other things with the total volume of the assets on the platform. While the individual loans are over collateralized, they were doing a lot of other things to generate even more money because of greed and whatever reasons you think, really, it doesn't matter. They were doing it. And now they're caught in a situation where they don't have that money. The big difference with what we'll be doing, it's all straight up. So it's clear, transparent, like we'll only make money on the interest rate of the loans, and we won't be doing any funny business per se in the back. And we'll be doing proof of reserve audits, all those kind of things. And eventually you'll be able to actually verify that that's there on the blockchain through like yourself, to make sure that money is just sitting there. So it's all, yeah, it's just basically the big problem of a lot of companies in the space is those things. And they're also built as well. It's kind of a dual problem. It's kind of tied in, but they're built on walls. Like, say, a lot of the existing companies are built on using Wall Street and big fiat business to build profitable company, or not profitable, but to build big companies. And it's kind of backwards with Bitcoin, is that if Bitcoin keeps getting bigger and bigger, it's going to put huge pressure on Wall Street because they won't be able to get bailouts. And it's going to, it's kind of like, yeah, they won't be able to get bailouts. There'll be trouble. And if these companies have tied all your Bitcoin in with Wall Street and firms start going bust in Wall Street, or even not directly Wall Street, but say big crypto firms like it's happening now with some firms going bust, it's quite likely your Bitcoin could be gone. And you'd be sick not understanding the business models they were actually employing and then losing your Bitcoin as a result. So our business is with a view to the hyper Bitcoinized world, that as Bitcoin becomes more prevalent, we're not getting caught in these kind of fiat games of like under like rehypothecation, under collateralized loans, giving your money to Wall Street where they don't really have the money to give back. They give that to their friends. Like none of that kind of stuff. It's all straight up. It's kind of what you think it should have been when you went into it initially, you know?
Yeah, you make your money off the interest repayments.
Yeah. So it's just on the interest, and super simple. We'll just be launching with that product to start, focus in the euro area, and then as we grow, we'll be like we're looking at a lot of different products like DCA products and stuff like that. So yeah, really exciting times.
Deadly. And whereabouts have you just got a Twitter for that, or just follow you?
Yeah, to be honest, like we'll be doing kind of a public launch in the next few weeks. Yeah, just if you follow me for now on Twitter, so it's still early, Jack. You'll see all the announcements, but yeah, in a few weeks we'll be getting loud about it. We'll say on Twitter. So
Deadly. At still early Jack on Twitter. Super. Well, Jack, it's been a great conversation, but my last question was always a bit of fun, bit of speculation. You know, we say we don't care about the price of the short term, but we do care about the price in the medium to long term. Um, the year is 2030. What price is one Bitcoin? You can give me a bearish and a bullish, or just have a bit of fun.
well, look, by then, if Bitcoin becomes this huge asset and it starts eating everything the way we think it would be, or we think it can, and it seems to have, we might just be spending Bitcoin and not worried about like everything might be denominated in Bitcoin, and we might be worried about like euros and dollars and those things. But like, look, it's going to keep going the way it's going, in my view, anyway, over long periods of time. A million would be quite conservative, I think, by 2030. So we'll say a million. But to be honest, if it keeps going the way it's going and it keeps eating things up the way it's eating it, I honestly don't think we'll be using dollars and stuff then, because like, why would you, like, I know they could say that you might have to mandate you can save in Bitcoin, but you have to spend dollars and stuff. But like, the reason people don't spend their Bitcoin at the moment is because they think it's going to go up in value, but there's going to come a time where it's just going to eat everything and there'll be a flat equilibrium. So yeah, 2030, I actually think it's more likely we could be living on Bitcoin and be on a Bitcoin standard everywhere. But if not, like definitely say €1 million, $1 million, like that would be quite conservative, I think, anyway. But again, who knows? If anyone thinks, as I said to you before the call, like if anyone's telling you they know what the price of Bitcoin is going to be, like they're lying to you, because no one knows.
No,
So,
no one knows the future. We can only speculate, guess, have a bit of crack, and have a little bit of exposure to this thing just in case we're right. You don't need all your eggs in that basket, but certainly to have no eggs in the basket wouldn't be a good idea. Jack's been awesome today. I want to thank you for coming on, and I will encourage the guys to go and follow you at Still Early Jack on Twitter, and we'll have to get you on and chat about Verify 21 when you guys have the launch later this year.
sure, love to, and great podcast, Dinny. I love listening to your episodes. So good to finally be putting Ireland on the map a bit for Bitcoin stuff.
Awesome. Thanks, man.
All right.